There were no revaluation reserve in the books of TAM as at the date of acquisition. The fair value of net assets of TAM PLC as at the date of acquisition were not materially different from their carrying amounts. So the group operates in the oil industry and incurs expenditure on research and development of products. These costs were formerly written off to the statement of profit or loss and other comprehensive income as incurred, but then reinstated when the related products were brought into commercial use. The reinstated costs are shown as development inventory. The costs do not meet the development criteria in IAS 38 intangible assets for classification as intangibles, and it is unlikely that the net cash inflows from these products will be in excess of the development cost. In the current year, TAM plc has included 22 million naira of this cost in inventory. 4. TAM plc has purchased a significant amount of new production equipment earlier this year. The cost before trade discount of the equipment was 60 million. The trade discount was 12 million. The trade discount of 12 million was taken into the income statement. Depreciation is charged on straight line basis over a 6-year period.
Mm-hmm. Continue, ma'am.
The policy of the group is now to state tangible non-current assets at depreciated historical cost. The group changed from the evaluation model to the cost model under IAS 16 PPE at the beginning of the current year and restated all of its tangible non-current assets to historical cost in that year, except for tangible non-current assets of TAM plc. This had been revalued by the directors of TAM on the first day of the current year. The values were incorporated in the financial records, creating a revaluation reserve of 80 million. The tangible non-current assets of TAM plc were originally purchased on May 1st, 2 years before the current year end, at a cost of 320 million. The assets are annually transferred from revaluation reserves to the retained earnings in respect of the excess depreciation charged on revalued tangible non-current assets. There were no additions or disposals of tangible non-current assets of TAM plc for the 2 years to the current year end. 6. The goodwill arising from the TAM plc acquisition was impairment tested at the first and second year after acquisition, and again at the current year end. The first and second impairment review revealed no impairment. However, the current review identified a recoverable value of 900 million for TAM plc. There has been no impairment in TAM plc's business since acquisition. 7. It is the group policy to value NCI at fair value. Required prepare consolidated statement of financial position of the RAM Group as at 30th April 2021.
Thank you. Okay, so let me solve all the workings for you, then you take care of the SOFP. So, as usual, the first thing you need to do is to draw your skeleton, Abi. All right, so the question goes thus. 3 years ago, on 1st of May, RAM acquired 80% of the ordinary shares capital of DAM, Abi, when the retained earnings of DAM were 110 million. And since the group structure was created, there were no issue of shares. The fair value of NCI was 160 million at job acquisition, and the fair value of the net asset of DAM was 850. So, all right. Any fair value adjustment related to inventory which has been realized. All right. So, let's move on. All right. So, the first thing we'll do, let me bring out these notes.
Mr. Kazeem, you are not recording it.
I have started,
Okay.
Madam Recorder.
Okay, sorry.
No, it's fine. Working. Number 1. So, acquisition analysis. Okay. The first note stated that, hope you have your own question with you because I'll be flipping around. They said RAM acquired 80% of DAM, Abi. That's the first thing. So we have RAM in DAM, which is 80%. Okay. And the NCI is what, 20%. So let's move on. So that's the first note. Leave every other thing alone. Let's move on to the second note. 2 years ago, to veil the identity of the owner of TAM, RAM acquired 40%. RAM acquired 40% of TAM, right? They said that 2 years ago, to veil the identity true owner of TAM. So RAM now acquired what? 40%, and DAM also acquired what? 25%. Are you following? So we also have RAM in TAM, which is how much? I hope you guys are following me.
40%.
40%. Okay. Then we also have DAM in TAM, which is also what?
25%.
25%. So I think this is all we have. This is what we have. So now we need to draw the, sorry, let me bring out my pen. Okay. So this is what we have. We have, this is my RAM. RAM first acquire shares in DAM, then now to TAM. RAM in DAM is 80, right? The RAM in TAM is what? 40. The DAM in TAM is how many percent? 25. So this is exactly what we have. This is how it looks like. Okay. Now, so this type of group structure, what do we call it, ladies and gentlemen? What do we call this type of group structure? Oh yeah, sorry now. What do we call this type of group structure? Are you guys with me?
Yeah.
Hello? Oh yeah, now what do we call this type of group structure?
Sub-subsidiary.
It's a complex now. You are forgetting this thing. This is not this is a complex group now. You are forgetting the group structure that we did. This is not nice now. This is a complex group structure. Because in the group, there is both fellow subsidiary, there is sub-subsidiary, and there is a direct subsidiary. So the first thing is the first step is to convert the group structure to fellow subsidiary. So how do we do that? We have R in D. We have RAM in DAM. This is clear. This is ACTI. Then we have R in T. For R in T, there is a direct of how many percent, please? How many percent is the direct? You guys should unmute. This is a revision, not a class. Unmute and let's discuss.
40%.
Otherwise, if you are not participating, me, I will just leave this thing for you. It's a revision
40%.
class. Yeah, not a class. So we should all communicate. 40. Then
Yes.
what about how do we get the indirect?
80 times 25.
Perfect. Now you are talking. Let's go. 80 times 25. So what do we have?
20%.
20%. So the total is 60, right?
Yes, sir.
60%. All right. So now the group structure is now fellow. So the next thing for us to do is to calculate the purchase consideration. Let's do the purchase consideration. So for the RAM, R in D, I think the purchase consideration should be direct, Abby.
Yes, sir.
Let's read 3 years ago. RAM had acquired ordinary share when the earnings was 110. So we have to check from it in the account. So that should be 690. Am I correct?
Yes, sir.
690.
690.
Yeah. Then for the R in T, direct, how much did we pay for that direct of 40% that we bought?
180.
180.
180. Sorry, let me confirm. Direct is 40. Okay. Then what about the indirect? We paid this other guy paid 110 for the indirect, Abi.
Yes.
So how do we now calculate the indirect?
That's
It should be 80% of 110.
what was paid, yes.
That's
How much?
88.
That's how much?
88.
88. Okay. So the total is what now?
268. 268.
268. $268. Now,
Yes.
who will pay the balance of 20% of 110?
NCI.
NCI of who?
NCI of
RAM.
RAM.
It can't be RAM, it will be DAM.
Yeah.
DAM. So they will pay 20% of 110. So this gives us how much?
22.
All right. So we have analyzed the group now. Let's move on. Can we calculate goodwill? However, I don't think we can easily. Can we calculate goodwill really? It seems there are a lot of adjustments, Abi. Or should we calculate goodwill before the adjustments, or we should do the adjustment before goodwill? Which one do you prefer?
Adjustment before goodwill.
Okay. So that means we'll come back to note 1 and note 2 later. So let's take this note 3 and we'll treat the note 3. When we finish all the adjustments, we'll calculate goodwill reserve NCI. So let's treat this note 3 now. So this is going to be my working 1. This will be my working 2. All right, this is note 3. Okay, they says that the group operates in the oil industry. The group operates in the oil industry and incurs expenditure on research and development of products. These costs were formally written up to the statement of profit or loss and other comprehensive as incurred, but reinstated when the related products were brought into use. The reinstated costs are shown as development inventory, and these costs do not meet the criteria of IAS 38 intangible assets for classification intangible. And it is unlikely that the net product of this product will be in excess of development costs. In the current year, DAM has incurred 22 million of these costs. So, do you know what they have done here, or do you want me to explain? I think you've done it before, Abi.
No, explain, sir.
Yeah, they have incurred some costs on intangible assets. So what they have done is that the cost that they have incurred on intangible assets, they have wrongly capitalized it. And based on this clause that we have in question, they said that these costs do not meet the development criteria in the IAS 38 for intangible assets. That means the cost does not meet the criteria for capitalizing according to IAS 38. However, they have done what? They have capitalized it. So what we will just do is to reverse whatever they have done. So how do we reverse now? Whatever they have capitalized, you debit your P or L with the 22 million and you credit your inventory back. You credit your inventory. So you now say bin reclassification of wrongly capitalized cost of inventory. Do you understand it now?
Yes, sir.
So this is exactly what you need to do. Why am I even writing journal for you? Narration. Anyway, it's fine. So that's the treatment for that. Okay. Let's move on to the next one now. Yeah, this is where we are now. Let's move on to the note 4. Dam at purchase. Hello, are you with me? Dam
Yes, sir.
at purchase a significant amount of new production equipment early in the year. So that means during the year, they have purchased a significant amount of new production line during the year. And the cost before trade discount of this equipment was 60 million. And the trade discount was 12 million. The trade discount of 12 million was taken to the income statement. Depreciation is charged on the baseline basis over 6-year period. So can you explain this to me? Can you explain this to me, guys? I want you to explain this to me before I solve it for you.
I think that instead of recording the cost, it was the trade discounts that they recorded as the cost of the assets, and it was taken to, and the cost is supposed to be a capitalized item, not an expense item in the income statement.
So what are we going to do?
The trade discount doesn't. The trade discount should be removed from the capitalized.
Okay, they have wrongly capitalized trade discounts, have you?
The trade, yes.
I mean, they have already expensed trade discounts instead of, okay, what is the treatment of trade discounts? Let me start from there.
We should remove it from the cost of the capital, cost of the asset, sorry.
God bless you. You are correct. The trade discount itself should be taken from the cost of the equipment. But what they have done is that they have taken it to P&L. So the first thing we'll do is that they have taken it as an income in P&L. We'll first of all debit our P&L, 12 million, to remove the trade discount. Then we will now go and remove it from PPE, Abi.
Yes.
However, there is a problem here now. You know, they said that the PPE should be depreciated. This 12 million now, at the beginning of the year, I'm hearing one uncomfortable noise. I don't know where the noise is coming from who? Okay, better now. The PPE was 12 million at the beginning of the year. And they said they would depreciate it for 6 years. So that means if we are depreciating it now, that 12 million will become 10 million by the end of the year, Abi. You will take out 1 year depreciation. So when you are passing entries at the end of the year, you must also account for the depreciation. So you credit PPE. That is the balance. It will be, it will remain 5/6 times 12, which will give you about 10. Then you debit your P or L. That's for the depreciation adjustment. So the depreciation adjustment on it will be 1/6 times 12. So that's 2. So this is how you pass the entries now. Because at the beginning of the year, it should have been 12 million. And that 12 million, at the end of the year, they will have depreciated it. So it will remain 10. So this is how you pass the entries for the PPE. All right. Any question on these entries?
I'm sorry.
Sir, please, I don't really understand the depreciation on the, like, since it's a trade discount. I don't know that we were supposed to depreciate it, so I don't get that part.
You should know. You should know. Let me explain now. See, the PPE was 60 million in the book, Abi. This is the current state. This is the current, what they have done. 60 current. This is what they have done. However, they are supposed to recognize PPE at how much? 60 minus 12, which is what? 48.
48.
So that means they will have been charging depreciation wrongly at 60 instead of charging it as what? 48. So the entry that you have passed here is to correct the wrong entry. Oh yeah, give me the depreciation of 60. this one divided by 6, how much is depreciation? Give me the depreciation. 60 divided by 6, that is 10, Abi. Oh yeah, 48 divided by 6, that's how much?
8.
Okay, so what they have done is that they would have charged 10 into P&L instead of charging 8. So the difference of 10 minus 8, 2 is what we are adjusting here, so that they have done over depreciation. Do you understand, please? They have done over depreciation.
Yes,
That is where
understand.
we are adjusting to. It's clear now, right?
Yes,
Is
sir.
it clear? Thank you so much. Thank you. Let's go on. So we are done with, we have how many notes left? Anywhere I get told by 8:30, I need to leave because I need to leave for airport by 9. So let's move on to these notes now. Notes, this particular one, seems there are plenty of grammar here. Anyway, grammar not the Q person. We go do ham. We go do ham. We go do ham. We go do ham. Note 4. Okay, note 4. The policy of the group. Are you following? The policy of the group is now to state the tangible non-current asset at depreciated historical cost. So are you following? Which means that now they want to start stating all their non-current asset PPE at depreciated historical cost. So the group changed from the revaluation model to the cost model under IAS 16 PPE at the beginning of the current year. So which means that currently now they are now using cost model, and they are not using revaluation model again. They are now using cost model, which is at the lobby. Let's see. So what they're saying is that currently they are now using the cost model. They are no longer using revaluation model. Okay. So they said at the beginning of the current year, and restate all its tangible non-current assets to historical costs in that year, except for the tangible non-current asset of TAM. Okay. This had been revalued by the director of TAM on the first day of the current year. The values were incorporated in the financial record, creating a revaluation reserve of 80 million. So the tangible non-current assets of TAM were originally purchased on May 1, 2 years before the current year, at a cost of 320, and these assets are to be depreciated over 6 years on straight line basis. The group does not make annual transfer from revaluation reserve to the retained earning in respect of the excess depreciation charge on revalued current asset. There were no addition or disposal of TAM in the current year. So can somebody tell me what we need to do here? Okay. Oh yeah, speak before I speak. You speak. You want to speak? Oh yeah. Speak now. Somebody want to say something?
I think we need to calculate the excess depreciation.
Okay. All right. So what they have done actually is this. Currently now, the group policy is to revalue all assets the group policy is to adopt the cost model. You know that IAS 16, you have the cost model and you have revaluation model, right? But now the group have stated clearly that they want to maintain the use of what cost model for all assets. They want to maintain cost model. But for TAM PLC now, somebody has done a revaluation model, which is wrong. So the group policy must be uniform, right? They must maintain a uniform accounting policy. So what you would do is that this 8 million that was recognized as a revaluation reserve for term, you need to reverse this entry. That is all you need to do here. Okay, you have to maintain the same policy across the group. So this is what you do. You debit revaluation reserve 80 million. Sorry, 80 million. But then you credit PPE. But what you're going to credit PPE will be net of depreciation. However, there is an issue here. Let's first of all check what is the useful life of the asset first. Okay. They say that the asset, look at it, the assets are depreciated over 6 years on straight line basis. The assets are depreciated over 6 years on straight line basis. So, but when was this asset acquired? I think they gave us when the asset was acquired. Let's read down. The group changed from the revaluation model to the cost model under IAS 16 PPE at the beginning of the current year and restate all its something except for that. So this had been revalued by the Director of Terms on the first day of the current year. The values were incorporated in financial record, creation, revaluation, reserve of 8 million. The tangible assets were originally purchased. The tangible non-current asset of term. See, this is the important statement. The tangible non-current asset of term were originally purchased on May 1. That was 2 years before the current year. So if the asset was purchased 2 years before the current year, and the total useful life of the asset is 6 years, that means we'll be left with how many years? 4 years, Abi? Am I correct? We'll be left with 4 years. So what you will just do is 1/4 into 80. I mean, this one is the net of, it will be 3/4 into 80 because we're accounting for the current year. Then the depreciation, you credit adjustment 1/4 into 80. So can you give me the figure?
60.
60 and 20, Abi?
Yes.
You have to be careful with ICANN pack. In their own pack, they have used 1/5, which there was no basis for that. So you need to be careful. Probably it was wrongly done. So that's the adjustment. Any other adjustment again? Let's see. The goodwill arising from DAM was impairment tested at the first and second year end, and again at the end of the year. So the first and second impairments were reviewed with no impairment. However, the current review identified a recoverable amount of 900 million for DAM, and there had been no impairment in PLC since acquisition in DAM. So this one is CGU. However, I think we should calculate let's calculate our goodwill first, then we will now come back to this note 6 on CGU. Abi, let's calculate our goodwill and acquisition, then we'll come back to this note 6. So now we need to calculate goodwill on acquisition, then we'll treat this impairment of CGU. We'll calculate reserve and NCI. That is all we need to do now. So let's quickly calculate goodwill on acquisition. So working 5. How many subsidiaries do we have? I think we have DAM. We also have TAM. Am I correct?
Yes.
So I'm doing a combined calculation for 2 of them to save my time. Purchase consideration is how much, please? We have done it somewhere. We have, okay, you have not written, Abi? Yeah, check.
690.
690 and 268. So what is the fair value of NCI? For DAM, what is the NCI of DAM? We have to check the question. We are 3 years ago on May 1. Ram had acquired 800 of something when the retained earning of them were 110. Since the group structure was created, there was no issue of shares, and the fair value of NCI was 160 million, right?
160.
Okay, let's leave that one for now. Then what about the second one? What is the fair value of NCI? So 2 years ago,
155.
where did you see it? The fair value of NCI, okay, 155. So we have 160 and 155, Abi. Sorry. 160, 155. So can you sum up, please? What's the total?
850.
423.
850 and
423.
423. So, what is the asset acquired? Okay. Our purchase consideration. What's the purchase consideration? I mean, ordinary share. What am I saying? The ordinary share capital. Do you have it? What? Call the figure now.
620, 220. 620, 220.
620 and 220. Then what's the pre-acquisition reserve? What they gave us now? What is the figure?
110 for dam and 65 for tam.
You are sure, Abi?
Yes, sir.
Yes.
Okay, I trust you guys. So I think that is all. Now they gave us a fair value of identified asset for in note 1. They said that why the fair value for this guy down? The fair value of identifiable asset was 850, Abi, and any fair value adjustment related to inventory had been realized by the current year end. So let's see it now. So what's the total? 620 plus 2 plus 110 is how much?
730.
So what's the difference?
Inventory.
The difference 850. This one should be the fair value
80.
of identifiable asset. For this is 850, Abi. So what's going to be the difference
is
now?
120.
120.
So this 120 is your inventory, Abi. Now, do we have the fair value of identifiable asset for TAM? Do we have? Let's read note 2. Let's read. 2 years ago, 40% or 25%. Sure. Retained earning of TAM was 65 million and DAM 160 million, correct? The fair value of NCI was 155. Okay, there were no revaluation in the full. The fair value of another is the same. So nothing, Abi. Huh?
Yeah.
You don't have. So all right. So can you total these two for me? 220 plus that's 285, right?
285.
So what is the goodwill? This one is 0, right? Huh? Then this one come
65.
138.
138.
38.
All right. So let's do impairment of
Goodwill.
CGU for DAM. They gave us DAM. Look at that last note. Look at the last note to the account. Last note in the question. They said that the goodwill arising from DAM was impairment tested at the first and second year after acquisition and again at the current year. So the first and second impairment review, no impairment. However, the current year identifiable assets had a recoverable value of 900 million. So the asset had a recoverable value of 900 million. So let's check the carrying amount. Our recoverable amount is 900, Abi. So let's check the carrying amount. So back to the SOFP now. Dam alone. So if you check now, the carrying amount of dam is how much, please? Tell me now. We've done this several times. What's the carrying amount of dam? What is the carrying amount? It is 1005 now. Your ordinary share premium, and retain any. Everything you have here is your carrying amount, 1005. Okay? Can I continue?
Yes, sir.
Yes, sir.
Okay.
It's your share capital, so the carrying amount, let's list them now. How much is the share capital, sir? 620. Share premium 105.
And 280 retained earnings.
280. Do we have any adjustment that we are
Yes.
supposed to make for dam? I think there is. Let's check. Note 1, note 2. Yeah, whose inventory are we reclassifying here? This note 2. Can you check whose inventory? Is it inventory of dam or inventory of TAM? Whose inventory are we, this intangible asset, whose inventory are we adjusting for?
Dam. Dam.
Okay. Dam, Abi?
Yes.
Yes.
Okay. So that means we need to adjust for, so that 22 inventories, so it will be part of the adjustment here. It will reduce their current, their asset inventory 22. We need to adjust for it. We'll deduct it because it will affect their carrying amount of their assets. All right, because something was wrongly stated, so we have corrected it. Then this trade discount of PPE, is it DAM or for the other guy? Is it DAM or RAM or TAM? Check. Trade discount on EPP.
Dam.
Is also DAM, Abi?
Dam.
Can you see the poison in this question?
Yes.
It was deliberate. They are deliberately loading them because many people will not remember to adjust for it. However, for the PPE, our adjustment is only the 10. The PPE is 10. It's only 10 we'll take out because the 2 has been consumed as depreciation. You can see the poison in this question, right? So PPE is 10. So I think that is all. Now, total all this now. Total, this should be
973.
carrying amount at end of the year. 973. So what is the recoverable amount? 900, Abi?
Yes.
Huh? So
Yes, sir.
surely there is going to be an impairment of how much?
73.
73.
73.
There's going to be an impairment of 73. 73, Abi?
Yes, sir.
Do we have any goodwill that we have recognized at all? I think there is goodwill for, let's check. There is goodwill for this guy, the goodwill for him. Just hold on. I'm trying to clarify. I think purchase consideration. Just a minute. I'm checking the term purchase consideration. There seems to be an inconsistency there. So that is exactly what I'm checking. The term purchase consideration. Direct is okay.
Oh,
65.
sir.
Yes,
The
I'm with
share
you.
premium, are we not supposed to use it at the DOA?
Hmm?
The share premium.
Share premium at the date of acquisition for who? For who?
Both dam and tam.
For both dam and TAM.
And tam.
Let me
When
check the question. At the DOA, 105, we are supposed to use it now. You didn't call it. I know something went wrong. Okay,
I was telling
nothing
you,
spoiled. Did you call it?
yes, I was telling you that you have missed the share premium, but it seems like you didn't.
I can't remember. Oh yeah, give me the figure. Share premium for this guy is how much?
105,
105. Then what about this?
56.
56. Okay, so I think we are on point now. We are correct. So this 120 will be 15 now. 15.
No, it will be 35. Oh.
120 minus 105 is 15 now. Then what about this guy? It will be 15. Then what about this guy? What is the identifiable asset again, please? 220 plus 65 plus 56. How much?
341.
Board.
34. So what's the goodwill now?
82.
82. The goodwill is 82, right? So if the total impairment of CGU is 93, so goodwill on consolidation will equal to 82 minus the impairment of 73. So the balance goodwill is how much?
9.
What's the balance goodwill?
9.
9.
9, Abby? 9.
Yeah.
So, however, let me show you how to pass entries for impairment. So, even though I've done something for you here. So, you debit your P or L. You know, it will be, this is DAM, Abby. That's 80%, Abby. 80% goes to this. 80% is DAM, Abby. 80%
Yeah.
of 73. Then you credit your NCI with 20% of 73. Okay, then you now credit your, you debit, sorry. Then you now credit your goodwill with 73, which is already done. So when you are consolidating now, this is a goodwill you adopt to be adopted on consolidation. You adopt 9 as goodwill on consolidation. Okay, so that is for the goodwill on acquisition. So let's do reserve and NCI because I need to exit shortly. I have about 20 minutes more. So let's calculate the reserve and NCI. End the class. 7. Reserve. So there are 3 people here. We have Ram, Dam, and who? Tam.
Oh.
So what is the reserve as per account? What is the reserve as per account, please? Oh yeah, now.
Sir, for RAM, 685.
85. Eh?
685. 685.
What about for dam? Let me check it myself.
280.
685, 280, and 76.
Correct.
So let's pre-acquisition reserve. What's our pre-acquisition reserve? We already have it, Abby. What is our pre-acquisition reserve? We use it in goodwill now.
110 and 65.
Eh?
110 for dam and 65 for dam.
Oh yeah, quickly calculate. Give me the post. All right. What's the post? 280 minus 110 is what? 170. Okay. What about this guy? Here should be 1. Am I correct?
Yes.
Huh? Okay.
Yes,
Yeah.
sir.
So share of post. So dam is 80%, Abby. How many percent is TAM now, sir? The total. TAM should be 60. Oh yeah, give me. So for dam.
136.
Eh?
136. 136.
136. Then for TAM is what? 11, right?
6.6.
It's 6.6. So
Yes.
what are the adjustments that is going straight to our reserve? So back to the workings. Working 1, nothing. Working 2, yes. We are taking 22 million out as inventory. Okay. Then working 3 too. We are crediting 2 million as over 2 million as over depreciation, Abby. Please, are you following me?
Yes, sir.
Yes.
Yes, sir.
Okay, this is like a revision, so that's why I'm a little bit fast. It's not classroom. So if you are not getting it, you better speak. PPE over depreciation. Revision is always like this. If it was a class, and we know how we can slow it down, but this is revision. I believe you all have the background knowledge of anything we are discussing here. Moreover, it's even an assignment that I'm just solving it for you back. So here too, we are crediting over depreciation again. There is another one of 20 here, Abby. On revaluation. 20. Okay, then that is all for note 4 too. Then let's look at note 5. Anyone here? No, I think the last one will be here. So what is the entries, please? 8% of 73. What do you have? What is 80% of 73?
58.4.
50.
58.4.
58.4. What about NCI?
14.6.
14.6. Okay, so this is what we have, Abby. All right, so we have 58.4. We are taking it 58. What do we call it, sir? Impairment. 58.4. Oh yeah, please give me the total. What's the total?
769.2.
769.2. Right? 769. 769.2. $769.2. So the last one is this. Let's do NCI. So NCI, there are two. So what is the fair value of NCI? That should be 160, 155, right? Can you confirm this before we move on? Okay. Then I think somebody needs to pay for purchase consideration, right? Who is the person? I think it should be Dam. Am I correct?
Yes.
Look at 22 is here. 22. So let's do share of post first, then we'll come back to the other. Share of post, it will be 20% of 170. That's how much?
$34. 34.
34. Then what about this guy? It will be 40% of 11.
0.44.
4.4. So is there any adjustment to NCI? Let's check our this thing from working one to the last.
Yes.
Number 3, no. Number 4, no. Number 5.
Yes.
Number 5, no. Number 6. Only the impairment, Abi. 14.6, Abi.
Yes, sir.
14.6. So can you add up so that we can combine the two together? Please add.
TAM is 144.8.
TAM.
TAM.
What about the second one? The first one, sorry. One what?
72.
172 point what?
That's
No.
172.
Another one.
172.
Okay.
172.0. The 2 is
All right.
316.8.
316.8. 316.8. So I think, yeah. So I think we are done. So we are done. So what we just need to do now is to balance up the accounts. All right. I believe that you should be able to take care of that on your own. Correct?
Yes, sir.
Okay. So please balance up the accounts, and if there are further query in the process of balancing the accounts, just send me a WhatsApp. At least the most important thing is that we have done all the note to the accounts. We have done all the entire workings. So balancing it up shouldn't be a big deal for you guys. But still, if you are facing any challenges in balancing it up, I will be glad to respond to your query. So I think I'm done for today. Now we have done. So on Wednesday, we'll take another question on Wednesday. Omni something. The same approach. I will solve all the workings of Omni for you. You will go and balance it on your own. So that's the approach I will adopt for all the celebration. At least you guys too should work. Okay. So we'll do that on Wednesday. So I will upload this recording version on YouTube now. Also share this working in MS Word to your WhatsApp group so that you can use it to balance up your accounts. All right. So let's call it a day for today. Thank you very much for listening. All right. Bye.
Safe journey.
Thank you.
Happy weekend, sir.
Thank you, sir.